monitoring some of my trading ideas on TradingView. The situation is that this trading friend is short currently on Nasdaq. I am long as the trend has been changed, and to help him, he told me that he is short in Nasdaq at about near of 14,000. I hope above 14,000 and not below, whatever. It seems that the current condition of his account is in this position, losing. So I'm going now to make this short video also to help in these situations what we can do. First of all, we go back to monitor the whole situation. In this chart, you see the yearly chart development of the Nasdaq, and you see here clearly Nasdaq is long. So for long term, that's very interesting for investors. If we go now a low time frame, let's say the monthly, we see also the monthly is over the level of about 14,800, which is really bullish. Also long-term consideration of this market is watching and showing us higher highs and higher lows. We had also some moments of breakout, of breakdown, and there are also to be considered that there are some situations in this market where we had non-trading situation, whatever. We go shorter to weekly or 5-day, meaning each bar representing 5 days. And here on 5 days, the market is coming below the pivot. So currently for the last 5 days, the market has lost around 55 pips or 0.37%. That's not so important to take that notation, as we have to look on the development of the price, and we see here that we have again higher highs and higher lows, so also bullish. And last not least, we have been also been long since the January of this year at around 12,350. The market is long. Now I'm going a little bit more in details, and we see here on 34-minute chart I have some indicators that are not offered on TradingView, because I've been developing them, all of them by myself, and so they are not representing to the majority of traders whatever. So we see here on the scale below the words bullish. On the charts we have the trend continuation, meaning that the market on 34 minutes bar, each bar is representing 34 minutes is bullish. Also the indicators and the stochastic, and that's very important for you if you're trading using any kinds of stochastic, but not the default of 1433. You need to adjust them and pass it to modify it to the trend trading, right? We see here that currently on 30-minute chart, the stochastic is bullish, meaning that there is very strong bullish power behind of it. Stochastic is very useful if you're taking profit, for example, if you're long or whatever, you're short, or if the trend is, let's say in this kind, the trend is long or bullish, but the stochastic is bearish, meaning overall the trend is bullish, you should buy. But at this moment, my friend, it's not a good idea to go in the market. You can also buy the market if you trend trade, for example, and say, all right, no problem with the drawdowns, I can keep there, I have strong nerves, right? But there are also traders who keep their focus on timing of the entry. So to me, both are important, but most importantly is on which side of the market am I at the moment, and to know where is the current trend. And the current trend is clearly on all the time frames bullish, right? So I would mention it. So we see here, we go, let's say on 2 hours. And we see also in 2 hours, we have very green signs, bullish. and also the RSI is above 50. That's a good sign that the market, the bullish trend will continue. The stochastic is also bullish. And if I go now on 5-minute charts, for example, and on 5-minute charts, that's very interesting. We see that the overall trend, you can read it below, is bullish. The volatility is really high. Why? Because at this part of the market, now the Wall Street turned higher at the end, and US stocks were trading mostly higher on Friday afternoon, with the Dow edging up into positive territory, while the S&P and Nasdaq were down not too much. So at the end, they are expecting the news what are coming next week, and the week ahead, especially July the 10th, is very important, as the central stage in the United States will be taken by June inflation report, so followed by speeches from several Fed officials. Additionally, investors will closely watch to the start of the second quarter earnings, the Michigan Consumer Confidence Index, and also producer prices on Tuesday and also on Wednesday, and last not least, the export and import prices. So furthermore, we have also some impacts from Europe, but it's not at this moment the topic of this conversation. So we see now currently the market is taking some ways of profits on 5-minute chart. We can see it clearly. We see here trend on 5-minute chart is down, but if I make it bigger, you see here the green one, current trend is bullish, meaning the trend continuation patterns are telling you we are in a bull trend, but currently the market is taking profit, the market is going down, and we are in a correction pace before the market will run hard. So I will now see how the stochastic is, and yes, exactly, the stochastic is giving also good signals. We see here from around, you see all the time red, and now coming down, coming down, coming down, coming down, coming down. So for traders who are maybe short, not at this level, but they are short at, well, I say 13,000 or 14,000, where my first rule of trading always has been and will be always protecting the capital, meaning a fixed stop of, let's say, percentage of the account, but maximum 1%, and that's really much too much. So as the complete stops or limits of all my account with all positions, and I am trading a big account of over 200 different assets, the maximum loss limit of the whole account shall not be greater than 5%, some say also 3%. So what would I do if I have been now in the position of someone who is losing? Well, I will wait the opening of Monday, especially as the Asian markets in Japan and Australia are opening, and the first price is traded there. We call that opening price, and if the market is down that limit or that pivot, meaning that during the next coming hours, let's say in Europe and in the UK and later on in the United States, the market will go down or stay flat, but it does not mean that we have a trend change. Below 12,280, we will have a bearish market. So if the market is coming down, I will monitor it, and before it turns back, I will possibly take the loss. If the market comes into my direction more and makes break even or even gives me 1 pip or profit, I will immediately close that short position, and instead waiting and then go long again to compensate that loss maybe I have been taking. Because the rule is never let your losses grow up. instead let the profits run, right? Also in lower time frame. So I will wait how the market will show itself, its cards to me, and once it is short, I say that the price comes near of my losing position to reduce my losses. Then I will take the loss and then stay away for a moment, and then maybe 1 day or 2 days after, then I will go in the opposite position. So to this trading friend, I wish all the best and success. But this is trading. We sometimes need to take losses to make bigger profits, but if only we follow our rules. Have a great weekend.